Hi, and today we will host an interview with Dag Bergheim Pettersen, CEO at Zinzino. So welcome all viewers, and especially welcome to you, Dag, and congratulations on a great Q2 report.
Thank you, Marcus. I'm happy.
Good to hear. But for all new viewers, could you please give us a short introduction to Zinzino and your business?
Well, to warn you, Marcus, I don't give short introductions. I have long answers to questions,
Yeah.
but I'll try to keep it short. So we're a Scandinavian-based direct sales company. I'm in the headquarter here in Gothenburg in Sweden. We're selling products to around 100 countries all across the world. Europe is our home base. It's within health tech, meaning that we are testing people before and after taking the products, and we have some skin lines as well. All in all, we have been around for 17 years. We are open and transparent since we are on the stock market here in Sweden, the Nasdaq First North, and we've had, which I'm proud of, profit and growth for the last 11 years. We don't have any debt. We own a factory, and we paid out dividend for 10 years in a row, which is truly great for a growth company on top of high profits. So that's the shortest I can do.
So if we look a little bit about the historical growth, what is it that has driven your historical growth, and how have you been able to keep up with having a positive EBITDA margin in the history?
I would say that it's basically based on a lot of things. I think we have competence in the space of direct sales, which is high. We have owners who are driven, we have focus, energy, and all of these things that you need to drive 17 years in a row with growth. I've been around myself for 12 years. And I've seen the development of the company over those last years. And then if you look at the quarter two, I would say that we have less of a growth last year. So the comparison of the numbers is a little bit easier to beat, and so to speak. You have a little bit of inflation and price fluctuancy, which is taking some of that. And then the Swedish krona is a little bit weak towards those markets that we are selling the products, like US dollars or euro. So that has an impact to the growth numbers of 24%. But overall, we have over double-digit growth anyway. So I'm quite pleased with that. And it's a record quarter when it comes to profitability, which makes me happy, because then we can make sure that the future continues lots of bright moments, because we can invest those money, which we are doing in tech and in products and in the organization as well.
If you look at the EBITDA result, for example, it grew by 167%, corresponding to a margin of 13.2%. But looking at the organization itself, is it operating at peak efficiency, or will you be able to continue to grow with these margins that we are seeing or saw in Q2?
Well, it's also a choice to complicate your kind of straightforward answer. So we have a strategy where we would like to grow the business to be one of the leading companies in our industry. Like, we have a lot of fantastic companies coming from Scandinavia, and they are bold enough to be one of the top ones. So we have that kind of ambition. So we are investing in tech and in products in new markets. So we will use some of that profits. That's why we have a kind of talked about having a profit of more than 9%, as we've said in the report, long term. So we will use some of that money to keep up with the growth, the revenue, open new markets, acquire companies, merge with other companies. So there is a fueling of that. If you ask me, on the other hand, okay, so if we need to optimize the organization and the profits, we could probably even do better in what we did. But we are investing a lot. and putting a lot of effort into the future as well. So that is very important to understand. But we are doing something really, which is almost like a contradiction. We have 24% growth, and at the same time, we have high profits. So why do we accomplish this? Well, you were pointing in one thing, and that is that the organization is working together with us. That's one thing. But we've already been talking for many years about scale of the business. So the scale of this business is very, we know that and we understand. So we are not on the peak. Is the right or the short answer to your question. We can do more on. So when the growth is coming, you will see even better results. That's my promise and what we're aiming to do. But we need at least 5-10 years where we are putting a lot of money and effort into tech and improving ourselves, new markets. So we have strong ambitions.
Yeah, that's great to hear. And when it comes to M&A, you mentioned M&A just recently, and I think you acquired skincare products and you acquired a network of distributors just recently. Yeah. And in the last quarter, the revenues from the skincare product line accounted for 2% of the revenues. How do you see this developing going forward now?
I should be a little bit careful in how I'm saying this, but the main thing for us when we do merger the last years of the two last companies, we've acquired 4 different companies. We acquired the science-based company in Norway. We also bought a factory who are producing products, but also developing products. And then we acquired VMA Life and Enhance in Asia and in Europe. Those 2 last ones are in the same category as ourselves, a direct sales company. And the distribution power was the main thing for us. To get access to their network, to sell our products through that network was the main thing. On top of that, we got like a couple of products, which was good, but that was not the main driver. The main driver was to increase the business and the growth. So we are... my expectations when it comes to the skincare is that it's going to be around that. But if we grow the business 10 times higher than what it is today, 2% is giving us some back. Some of our partners and customers are using the products. It's a fantastic skincare line. But our focus is on the core, which is test-based nutrition. So that is kind of the main thing for us.
Yeah.
But then we have the skincare line on top of that. So let's see how the future goes.
So if you look at the distributors that was previously selling the skincare products, how has their interest been in selling healthcare products?
Well, they were selling 2 different lines in the last company in Switzerland. So they were selling nutrition from before and skins as well. And they actually had like a 60-40, we could say to ease the numbers up, 50-50. So they were already used to selling nutrition. The good thing about that, they have doubled their revenue this year so far compared to what they did for 1 year on its own last year. So that is the answer in itself. They're doing tremendously well selling our products. So we have been, for the last 12 years, developing like super strongly. We just reached a goal of having 1 million tests. And to give you kind of the idea of what that is the largest database of fatty acids in the world, which we are now starting to really analyze. So we have a tech product which is just through the roof, I would say, and it's really disruptive. But we have also invested tons of money in tech and the back office for partners, also the front end for the customers. So we've done a lot of investments. So they came from a more humble world into our space, which have been a driver, but they have been really good for us because the quality of the people that we brought into our network was just through the roof amazing. So I'm super happy for that kind of merge. And that is a win-win kind of merge for me. So I'm looking for those kind of merges into the future, not necessarily the products, but the distribution power and a win-win success formula.
comes to distribution power, are you referring to distribution power and high quality distributors? Are you referring to those that are having a high revenue per distributor, or what is your description of a
For
high
me,
quality?
the quantity of how many distributors there are. So we got like a database of 20,000 around that who is selling the products. Some of them are super active. Some are a lot more like every second day active. Some are like weekly active. So they can choose that themselves. So, but having a lot of active, inspired distributors out there in the world selling our products, that's the main and aim goal for us.
Yeah, and another good thing with your business is that you have large part of your revenue on subscriptions.
Yeah.
Can you elaborate a little bit on that model and a little bit on what share, how much of your revenue are coming from subscriptions?
I can do that totally. I have the figures here in my head, so I can give it like precisely even. So first, we are separating customers and partners, distributors. So they are kind of an affiliate who refer the products, and then they get commission out of that. Amazon does the same thing. We are more into the space of direct sales than Amazon, but they have affiliates. People can sign up, refer products, and then get paid for that. So that's the same way, or Herbalife or other companies that are doing the similar thing as we do. So that is the model clear, but it's very clear between customers and partners. So 85% of our revenue comes directly from customers, which is a good number because then you are having a stable retaining customer base who's buying the products. So logistics, production, sourcing, and all of these things which is necessary to run an operation of our size now, really important. So give stability to have a lot of goods in the warehouses around the world. So growth in combination with customers that are on subscription gives you a very stable business, so to speak. So I can already predict, which we have done, the future of this year, and I have some idea about next year. So that's the kind of the beauty about having this model.
Yeah, it's nice to have predictable revenue streams at least. But in the Q report, you mentioned that you were aiming to launch new products. You didn't say that much about this, but may I ask you what product line are you aiming to launch?
No, it's going to be, well, since test-based nutrition is kind of the main core of our Zinzino products, it's within that space. I think that we are postponing some of that product launches, but maybe some concepts. And we are doing a couple of studies also based on our products. So we are this year would be less about new products. We had an aim for launching that in October, but I'm not sure if everything is ready. We've learned over the years that we need to finalize things and do it perfectly more than just launching for launch case. So we are a little bit more reluctant on before we really are ready. So and we have been focusing now on opening the Turkish market, which has been good for us. And now we're aiming to open up Mexico. So there's a lot of work going on in the company. So that postpones and delays some of the other elements, which isn't a problem for the revenue, more like it's fun for the distributors to have new products and new excitement around that. But it's not, so maybe the report is giving a little bit of a mispicture is wrong to say, but I don't think it's going to happen this year.
Yeah, but you mentioned Mexico that there will be a new market for you in the future. How is it with distributors in Mexico? I mean, how does this process work when you open a new market?
Oh, that's a good one. So here's one of the benefits. There's two benefits about our model. I'm going to explain one of them and both of them maybe. So first, we're not as cyclic as other businesses, because when there is a low economy season, we might have easier access to new partners who wants to earn some money, spare time. And when the economy goes up and everything goes easy, and then it's easier to sign in customers. So that's number one. So in Mexico, how we've been working now for 2-3 years of this launch. It takes time, regulatory, product registration, setting up things, logistics, call center in Mexico City, all of these things which is you need to do. So we already probably when we start have maybe 400-500 distributors already on the starting line when we open that market. So I can already now predict some of that revenue for this upcoming years, I would say, this year and next year. But it's always a little bit, depending on how things are going. We have launched a lot of markets, so we have some experience in how not to do it and do it, and taking some learning points of that.
It's good. Good stuff. All right. Well, that was my last question. So thank you all the viewers, and thank you, Dag, for taking the time, and good luck.
Thank you, Marcus. Thank you for having me.
Thank you.